Yeah, so this guy said I should make a video on POI, please. So that's what I'm going to do today. Let's just get straight to the chat so that I show you guys how to do that.
Again, guys, you can see I had this back-to-back SL today, which was so painful for me today. You can see this one especially took me out and then went to the outside. This was my my entry over here. This was my structural liquidity over here. Price tapped and gave a strong confirmation before I took the trade. You can see that it gave a very strong confirmation before I took the trade, and then you can see price came down, was very choppy, took me out, started going to the upside. For this one as well, I had my point of entry over here, structural liquidity over here, went into profit, took me out. Very bad day for me, so I'm actually done trading for today. So let's just get straight to the video and why we are here today. When it comes to POI or POE, some people call it POI, I call it POE. So the POI stands for what? Point of interest, and then the POE stands for what? Point of entry. Do you understand? It's practically the same thing. So I have three main POEs I use, which is what? The OBR, which is the order block reversal entry model, the OBC, which is the order block continuation entry model, and then what? The BB, which is the breaker block entry model. Do you understand? So I'm going to take them one by one for each video. I don't want the video to be too long, so I'll take them one by one for each video. So we'll take the OBR today. The next time we're going to take the OBC, and then we go to the breaker block. Do you understand? Because I've done this video several times, but I've kind of summarized all of them, but now I'm going to take them one by one so that I can get into more details and have more practical examples. So let's just get straight to the chart. Let me show you guys what these are. Talking about the OBR, you need three things for you to have a very valid OBR entry model, which is the order block reversal entry model. You need what? Number one, your break of structure. Number two, your market structure shift, and then number three, your structural liquidity or inducement. Do you understand that? It's very simple. Break of structure is when market is breaking highs in an uptrend and breaking lows in a downtrend. The market structure occurs when market is breaking a low in an uptrend and breaking a high in a downtrend, guys. So I saw a question where someone was like, I should show you a valid break of structure. I've already made a video on that. All you have to do is scroll through my page, you'll find that video, then you watch it for yourself. It's very self-explanatory. Do you understand that? So this is how the diagram looks like. This is like the blueprint as to how to find your OBR, order block reversal entry models. So let's just get straight to the chart so that I can show you guys some practical live charts, practical examples on how they look. Guys, I found the perfect setup in this area. Let's mark it out right now. You can see I have been on a winning streak on gold. That was last week. This week was very bad for me. You can see I had 2 losses today on gold. This was so bad for me. Even though yesterday I had back-to-back wins on gold, this was like the losses hit me pretty hard. Do you understand that? Let's just get back to what we're talking about. Yeah, so this is the place we are talking about over here. You can see market created what? Market was in an uptrend over here. Do you understand that? So market was breaking highs. We had what? A higher high over here before having what? A higher low over here. So first of all, let's mark out our break of structure. I told you in an uptrend, if market breaks a high, we call that what? A break of structure. So we have a break of structure over here. Let me write that in BOS. And then what? Market comes to break this low over here. In an uptrend, if market breaks a low, we call it what? A market structure shift. Do you get it now? This is a market structure shift. So let's mark it out, MSS. So you can see price went bullish before coming down to break this structure over here. Price went bullish. Price went, let me use the arrow. That is going to be more convenient. Over here, you can see that price went bullish before coming down to break this structure over here, causing the market structure shift over here. So we are going to look for what? The last bullish candle, which is this particular candle over here, guys. You can see this red one. That's my last bullish candle. So let me mark that out with my box, my rectangle too. Very good. So once you mark that out, all you have to look for is what? Inducement. All you have to look for the next is inducement. Let me clear this once so that we don't have a messy chart. The next thing you have to look for is what? Inducement. Do you understand? An inducement is the first failed pullback to what? Your point of entry. Do you understand? Your first failed pullback to your point of entry. A pullback that looks like it is going to touch the order block, but then it doesn't get there and retraces back to the downside. You can see we have multiple ones over here. We have one over here. We have another one over here. But remember, you pick the one which is closest to your what? Your point of entry, which is this one. This one is the closest one. It went higher than this. So we are going to pick that one as our inducement. So let's pick that out. Inducement like this. So structural liquidity, SLQ or IND, inducement. Do you understand? We've marked that out. So you are just going to, once price taps into your zone like it did over here, you can see price came, tap into the zone and sold to the downside. You are basically going to take your entry over here, targeting what, a 1:4, like I always do, guys. Remember, I always target a 1:4. So for those who want to start trading and have the accuracy like I do, you can also start targeting a 1:4 risk to reward. Stop loss on top of your confirmation or your order block. So yes, targeting a 1:4 risk to reward, and then that's basically it. Something very, very easy. Do you understand? Let me clear these things. The chart looks crowded a bit. Let me clear this one as well. Yes, so you guys can see this is the trade over here, a 1:4 risk to reward trade, easy trade. You can see that price tapped into the order block, this order block, and then straight to the take profit. So guys, that's basically how to find the valid order block reversal entry model. In the next videos, I'm going to be doing order block continuation. The next one I'll do breaker block. So guys, as usual, comment what you want to learn about forex in the comment section of this video, and then if you are lucky, I'm going to make a video on that for you in the next videos to come. Guys, for those who want to join the VIP signal group and the mentorship, you can just go ahead and reach out to me so that we work on that for you. February mentorship graduated, I think, a day ago. For the March mentorship, as I said, we are starting with the strategy next week. So if you want to enroll for the March mentorship, hurry up and enroll between now and Monday, else I'm not taking any enrollments for March mentorship again. Do you understand that? Okay, so guys, for those who want to join the Telegram as well, enjoy the free signals I'll be sending to the channel, click the link in my bio, or send it. If the link in my bio isn't working for you, just send a DM to me so that I can personally send you the link. You copy and paste it in your browser, you have access to the channel, guys. And then for those asking for my YouTube channel, the link is in the bio. Just click on it so you have access to it. Guys, that's all for this video. Break of structure, market structure shifts, structural liquidity or inducement, order block reversal entry model, taps in.